Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, April 19th, 2023. I am Frank Ochoa, aka PivotBoss. Happy hump day, everyone. Here's a look at the daily time frame of the ES. The previous session, you'll notice right here, price got to its closest point to the 4,200 edge. 4,200 is the edge that we've been talking about here. The market distribution is from 38 to 4,200. We've been trading well within those boundaries here lately. And we mentioned before, on this move up, we could see a move to the extreme of the range at 4,200. Yesterday's high of 41.98 quarter basically, for all intents and purposes, meets that criteria of reaching the edge. Now, do we go get the highest high of the last quarter? That would be 42.08 half. If we get the top of the key range here, it'd be 42.02 half. So perhaps there's still a little bit more upside that could be seen, but for all intents and purposes, we've made our move all the way across the range here. And at some point here, we could be looking to return back toward the previous year's close and the bottom edge of the range. So watching here, whether this is the high or whether we get a higher high failure here up ahead, we'll see. But from a swing perspective, kind of a medium-term perspective, we've reached that edge, and we could be looking to turn down up ahead. As of right now, though, this 8-period average continues to be very bullish here. You see every test at or below it continues to be rejected back up. We are precisely at it right now. As a matter of fact, if we start to push back above the previous session's low, we could see an outside reversal back up as this market continues to show a very bullish tendency right now and continues to lack a significant rejection in either direction. This was a significant rejection, but again, it was within range, so we knew to be a little bit suspect. Right now, again, this bullish Pima trigger zone continues to be in full effect. So no major rejection just yet, but technically speaking, we've gotten to the edge right now, and we could be looking at a return back toward 38.68 ahead. But we have to wait and see when we get that strong rejection first. All right, let's take a look here at the NQ. Similar price action in the NQ. Very clear range that is developed here. Now a 15-day narrow range. 15-day narrow range. So we can bring this down right here. Bring it up to a 15-day range. Apply those settings. And right there you'll see the compression here. 55% of average. Only 423 points of range over the last 15 days. And this thing would normally have somewhere around 700, but again, this is a significant decline in that ADR. So for the most part, we should be looking at something well beyond the 870 up here. We should be looking at something well beyond 1,000, maybe 1,250 to 1,500 points of potential movement. That's what we've seen here on these recent rotations when things get this compressed. So a big move is building. We have tremendous edges. I mean, these 13,300 tremendous edge over here. On the lower edge right here, you got the 12,925 level, 12,950, big time edge right there, and we are precisely at the midpoint of that edge. So again, the previous session put in quite the tail, a nice little reaction and rejection up there, but it's still within range, and it does not suggest a breakout is imminent just yet. We are still within this range developing, and this potential move to come could be huge. Which way do we go? Again, a breakthrough 925 here, those lows 900 opens up a return back to 12K and perhaps a little bit lower. If we are to float to the upside, then 13,750 would be the next big key level ahead, and then of course you have the 14K level beyond that. So we'll be looking to see which way we go out of this range up ahead. Taking a look at crude oil, this one's down about 1.5% right now and has backed off of recent highs. That 83.52 key level there, the 83.53 was the high, and it backed off that level. The failure at 82, the failure at 81.50, we mentioned if it fails there, it opens up a return to 79s. Today's low is exactly 79. So the low back here is exactly 79. So both of those lows right there coincide very nicely here. That's why, again, when we mentioned a bit earlier that if it fails at 82, 81.50, it's going to go to the recent low right back here, which was 79. It got it perfectly today and has maintained a downward move over the last 5 days. Now, this is, again, where, based on the market structure that we saw on the intraday charts, the 60-minute time frames, we could get a bounce back up toward 82, but that bounce could be defended for what could ultimately be a push into the 75.70 level, which is the previous quarter's close and also the gap fill as well. So that would be a target up ahead. The next pullback could be an opportunity to sell for a continuation down, but the short-term target has been reached at 79. We'll see what comes afterwards. The next bounce could be a lower high to be faded. Taking a look at gold futures, this one's down about 1 1/3% right now. Finally starting to try to give up the 2,000 level. Bit of a higher high rejection there. Inside day yesterday and breaking that to the downside. At the moment, again, this is one that if it gives up 2,000, you start opening the door to 960. Failure at 960, you're opening the door to the 1800s down below. Again, 1830 would be the easy sticky target to go find if this turns out to be the rejection here that we've been looking for. Still quite bullish overall within the overall uptrend. If it holds the previous month's close here, perhaps it tries again to the upside, so it's not failing outright, but this is a decent higher high failure, a decent weekly rejection bar, and again, failing to hold 2,000 would open up a return back down. Lastly, taking a look here at the YM. This one, inside day at the moment, continues to remain extremely bullish on the shorter time frame. So looking at, say, the end of March to current pricing right now, very, very bullish, never really reaching the 8-period average. Yesterday held it, today holding it. Inside day here today within a very narrow range that has developed over a 6-day process. Before, it had developed this 6-day range here, ultimately pushed to the upside. So no pullbacks at all. I mean, really no pullbacks at all. Ever since this failed new low, it's been a higher low all the way up. This was a higher low, and then these lows were all above that low. You push higher, and now again you're still higher. So this thing cannot really even pull back below a prior low by far. Yesterday was a barely pullback, and it continued to bounce. Finished the day looking like last Friday. So a couple of dojis up here, doji-like rejection yesterday. So again, still holding at these highs, still building energy within the shorter term range here, but the directional conviction remains to the upside, and we have yet to go finish the 34,500 target that we had to begin with. So when this day was developed down here, we mentioned on that day that any push through 33K down the road opens up 34.5 now due to a market structure recovery. 34,550 would be the actual edge of last quarter's range. So we're still working our way up right now until proven otherwise, at least with regards to the YM, and this narrow 6-day range right here could lead to the next push ahead. So keeping that in mind right now, bulls continue to keep the YM bid. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.